What to do when you have just set up a limited company, and this is just I'm going to try and make it brief video for YouTube. I do hope you like it. Please subscribe, like, share if you do. So this is just brought to you in association with Google's The Bookkeepers. So what to do next if you've just created a limited company. Question to begin with is, when is the year end? This is the first question you need to ask yourself. So for example, if the company was formed in January, then the year end for the limited company would be the 31st of January. If the company was formed in June, any date of June, then the year end would be the 30th of June. So the question to ask yourself is, what date is it now, and how long have you been trading? Now, when it comes to how long you've been trading, you've got to be aware that you have 9 months after the end of the first year to file your accounts. So what does that look like? If your year end was the 31st of March, then you have until the 31st of December to file. So you've got 9 months after the year end. If your year end is, for example, the 30th of June 2020, then you have until the 31st of March 2021 to file. Generally, it's 9 months after the end of your financial year. So, another example, if you started your company on the 6th of January 2021, then your year end would be the 31st of January, and your year end doesn't change. You can apply to get it changed with Companies House, but generally, if you don't change it at all, then it just sticks and it's at the 31st of January. You trade for 1 year. End of year 1 would be the 31st of January 2022. So you have to trade for a year, and then it's 9 months after your first year that your first set of accounts becomes due. You've got 9 months to file. So in our example here then, our deadline to file our year 1 accounts would be the 31st of October 2022. And you see, this is the problem, because people think, oh, I've got ages. And yes, in a way you do, but this video is just to help you get prepared so that these things don't get on top of you, and you know what to do. So there's a warning I must give you, that if you are late with filing your accounts, Companies House will fine you. They are quite strict about it. There's not many excuses they allow. And even if you've not traded in year 1 or in any year, you still need to file what's called dormant accounts. It's a nil return, but these accounts need to go to Companies House and also to the HMRC, and you can file it in a 2-in-1. You go into HMRC and they give you the option, and they say, would you like to use this filing service to also file with Companies House? You say yes. So it's one login that you'd use to log in to HMRC, and you can file it in 2 places. But you must file it on time, otherwise there is a fine. Now, can I file my accounts myself? This is a popular question. And the answer is maybe you can. If you have an understanding of accounts, particularly of profit and loss accounts and balance sheets, then yes, go for it. There's nothing to stop you. But the good thing is that it's being made easier, this annual filing, because of the software that's out there, and they're working on it at the moment so that you're able to send your figures directly from your software to Companies House and to HMRC. So it's getting easier. But I would say you ought to have some level of understanding of filing and of accounting. You might just want to leave it to the professional in this case, but no special qualification is needed. If you're feeling confident, then by all means go for it. So the video I'm creating here is just because I'm continuously asked, what do I have to do next if I've just created a limited company? So let's just go through that step by step. So after you've created your limited company, there's 3 things that I'd suggest you do. Number 1, open a bank account. Number 2, decide on your accounting software. And number 3, connect your bank to your software. So let's go through all of those ideas one at a time. So number one, opening a bank account. Now this video is specifically for the UK audience. So if you were going to open a bank account, there are lots to choose from. The first sort of thing you need to decide on is whether you want to go for a high street bank, such as those on the screen, or do you want to go for an online bank. Now, if you're going for a high street bank, the things to consider are things like location. So if it was me, then I would want to go for a bank that was either near to my office or near to where I live, just for convenience. So some people just say, right, well, the nearest one on my high street is, let's just say, NatWest, so they would open their business account with NatWest. Fair enough. You might look at where you bank personally. If you've already got a relationship with them, it might be easier because you've already got an account with them. And then again, for some people, they don't want to bank with their business account in the same place where they have their personal banking. So it's an entirely, sort of personal choice, but these are the things to think about. And then consider the fees, the monthly fees, and the kind of charges that they charge you, whether there's any difference between them, and what that might mean. So all of those on the screen are high street banks, well known, well established in the UK. There are others as well. Lloyds Banking Group also owns Halifax, for example. NatWest owns, I think it's Bank of Scotland. So, there is some interlap between them. The next thing when looking at online banks, and there's more and more popping up all over the place, is have a look at the online reviews. What do people say? Next thing is, does it connect with your software? That's a thing to consider. Is it easy to open? Sometimes they're not for whatever reason. Does it deal with foreign transactions, and is that important to you? So for some people, they have euros, they need euros because of the sort of online transactions that they're doing. It may or may not be a factor, but just look and see if that bank offers that. And does it come with account software? Because increasingly, a lot of these online banks have their own sort of accounting functionality coming with it. So these are the things to consider. So online banks that have been around for a little while that you can look into include, and this is not an exhaustive list, but for example, there's Monzo, there is Coconut Bank, there's Starling Bank. Counting Up is one particularly that is a bank, and it comes with a software. There's Tide, and there is Revolut, as well as another one which is called Metal. Metal is part of the NatWest banking group. It's NatWest's online sort of sister bank to challenge these what we call rival banks, because the online banks have been taking a lot of the market share. It's because it's easier to set up. You don't have to go in. There isn't a bank to go into as well. You just take a picture of your passport and a picture of your face on your phone. Maybe within 24, 48 hours, you've got your account opened, you've got a bank account and an account number and a sort code. It can be that easy. Think about if you have cash to bank, whether that will affect your choice, because oftentimes you'll want to have an online bank if you need to deposit cash. But that said, some of these places allow you to be able to deposit cash at the post office, for example. So just have a look and just see what you need and what's going to work for you. So they're just a few to be getting on with, to be considering. Next, after you've opened your account and you've decided on that, then decide on your accounting software. Now, there's lots of accounting software out there. I'd say the three most popular ones, probably well known, is QuickBooks. I believe has got like 50 million users globally. Free Agent, that's a Scottish based software which has a partnership with NatWest. So if you bank with NatWest or Royal Bank of Scotland, or you have Metal as your online bank, then you get Free Agent as a software for free. So worth looking into if you're banking with any of those. And then there's Xero, which is a New Zealand based online software which has millions of users too. So decide on your accounting software. There's plenty of them out there. Notable ones are on the screen there: Zoho, Pandal, Sage, Cashflow, Clearbooks, Wave. That's just a few. There's a plethora of account software out there. If you decide on your account software first, just check that it is compatible with the bank. So it will be compatible with any high street bank, but some of the newer online based banks may not have the banking feed connected to the software yet, but it's coming soon. But just check on compatibility. And these are the things to consider when looking at an account software. How much does it cost? There's normally a monthly charge, but sometimes they give you a discount, and it is possible that you can get it for free. I know Pandal has a free version. I think Wave does or did, but it is Canadian based and isn't supporting sort of a UK base as yet. They're recommending their people go over to Zoho. So think of that. Think of the ease of use. How easy is it for you to use? Who's heard of it? What does your accountant like? Is it supported in your country? What do you need it to do? Is it capable of doing it? Some people need inventory and stuff like that. So just check, will it do what you need it to do? Do you need it to connect to your website, for example? And if they've got an app or a version of it where you can run it from your mobile phone, do you like it? Is it easy to use? Are you happy with it? So I think all of them give you a free trial of some sort. So just do a bit of research into them. But I would strongly urge you to get some sort of account software when you first set up your limited company. And then once you've decided on the two, the software and the bank, then you connect your bank to your software, and that's just to aid in the automation. You push your transactions into your software, so the transactions on the bank get pushed into the software, and that's how you can get your bookkeeping done, and that's how you can get your accounting done. Now, in terms of your receipts can be scanned and pushed into your accounting software. They can be emailed in. If you have the app of the software on your phone, you can take a picture of the receipt on your phone, push it into your accounting software. By law in the UK, you have to keep your receipts for 6 years. And with electronic receipts, something's emailed to you, you don't have to print it off. And when you use software, you just attach it to the transaction, and that's that takes care of all your receipts. So you need to keep your receipts to prove that expenditure was made. These are the kind of good habits you need to set up from the beginning when you start a limited company. Use your business money to buy business items. Ask your customers to pay you into your business account. So stop using your personal account if that's what you've been doing. If you don't have a business account yet, I urge you strongly, open one and just use your business account for business purposes and be keeping good records. These are the good habits that you need to get into. It just makes your life easier, believe me. At the year end, it's very easy. If all of your transactions are on your software, you're doing the books as you go along, and you literally just push a button, out pops your profit and loss account, push a button, there's your balance sheet. So this is why I say get software, and why I say make sure you just have a bank account and only use your bank account for business transactions, and then it's not messy. It's not, oh, that was personal, oh, that was me doing my shopping. No, you just keep it very separate. So there's normally a few questions that come up at this point, and I just want to cover them just so that I'm covering them. So At this point, sometimes people think, right, okay, so how then do I pay myself if I'm a director and I've got this limited company? How do I take money out? How does the tax work? These are usually the questions, so let me just go through them briefly. How do I pay myself as a director? Well, there are three ways in which you can pay yourself as a director of your limited company. Number one, the director is on their own payroll, and the company, the limited company itself, runs a monthly payroll. So the director can be just the only person on the payroll, or there could be 10, 20, 50 other people on the payroll. Doesn't really matter. The company runs the payroll, and the director is just one of the people who gets paid. Second way in which a director can take money out of their company is through dividends. And you can only take dividends if there's been a profit. So sometimes, usually, people end up taking that sort of at the year end, or so that they know that there is a profit to be made. And then the third way is that the director is self-employed and simply invoices the company, and that's how they pay themselves. So the key thing which you have to remember with a limited company is that a limited company is a separate legal entity from the director. So the company is the company, and then the director is an individual, and both of them can trade and do their own things. They are not together, they are separate legal entities. Very, very important to understand that, which means that the limited company has got its own set of accounts that it needs to file, and it's got corporation tax to pay because it's a company. The individual who's the director has got their own tax to pay, and they are completely separate. So the company can close down, go bankrupt, anything, nothing to do with the director, and vice versa. So separate entities. How does the tax work for each entity then? So as a director, the individual, the director pays tax on any income that the director earns. And in the UK, you're taxed on all income, basically. It's probably everywhere in the world. But the rate of tax is, there's a basic rate of 20%, and then there's a higher rate of 40%. And everyone's allowed to earn a tax-free income, a basic tax-free income of roughly £12,500. It tends to change every year in April. That's why we have to listen out for the budget. So you're allowed to earn a certain amount tax-free, and then after that you pay 20%, and then after another certain limit you're then on a higher rate of 40%. And there's actually another limit beyond that, which is 45%. Now, what the company does is the company has to pay corporation tax on its net profits. And the corporation tax, again, can vary, but the UK tax rate normally set in April. They don't tend to change the corporation tax very much. It's been hovering between about 19 and say 20% for years. But the company pays corporation tax on net profits. What's your net profit? It's your total sales minus your costs, and that becomes your net profit. That's what the company pays corporation tax on. So it's not on all income like an individual, it's just on its net profits. Now, what should you do if you've just created a limited company? My question I normally ask people is, why did you create the company in the first place? Who told you to create the company? And at this point, it's just worth finding an accountant to guide you if you've got questions. I would imagine you have already sought some sort of guidance, which is why you created the limited company in the first place. If you've created it and you don't know why, then I don't know why. But just I don't know why you created it, but there you go. So what should you do next? Well, in order to be able to file your tax returns, which is what a limited company has to do, then you need to file with HMRC. So it's worth just registering with them, hmrc.gov.uk. It's online. You create a username and password, and then there's different services that you can register for. The service to register for is called filing your corporation tax returns. This is just for limited companies. If you are a director and you have to fill out a self-assessment because you've earned income that you need to declare to the government in order to pay tax on it, then that's a separate registration and you need to file a self-assessment tax return. That's for the individual. And you've got to remember, as a director, if you have, let's just say, gone with the third option, you as a director have just sent your own company an invoice and taken some money and paid it to yourself, that money as an individual, you haven't paid any tax on that money. So that's why you as an individual have to file your self-assessment. If you were on your own company's payroll, then the company would have sorted out your tax and your national insurance for you, so there'd be nothing for you to do. But when you have earned money that you haven't paid tax on, that's when you need to put it on your self-assessment and pay tax on it. Directors normally have to file a self-assessment to report the income they've had from their business when they're not on the payroll. So if you have dividend income, you put that on your self-assessment. If you rent out property, you put that on your self-assessment, because it's all the income you've earned that you've not paid tax on as an individual. And when you're taking money out of your company, unless you're on your own payroll, you haven't paid any tax on that money. So as an individual, you have to account for that. You have to let the government know. If an accountant does it for you, as in files your company tax return, or even does your self-assessment for you, then they can use their agent maintainer login. So you don't actually have to register with HMRC to get your own username and password to file, because the accountant can do it for you. So just at this stage, that's what I say. I don't know why you started your limited company, but if you're going to get an accountant to help you, then your accountant might just do this filing part for you. You don't have to register, but otherwise you do. So what to do next? Depending on your business, some industries, you need to register for certain things. So you may be in a highly regulated industry, you might be a lawyer, solicitor, whatever. You've got to register with the Law Society, for example. If you are a hairdresser or accountant, whatever, there's professional indemnity insurance that you need to take out. Certain professions, for example, estate agents, they need to be registered with certain bodies like the tenancy deposit schemes to put in their tenants' deposits. There might be a fit and proper persons test, local authority licenses for HMO licenses or whatever it is they might need. So they may need to be registered for anti-money laundering, so you've got to sign up for that. So whatever it might be, you've got to sort all of that out. You know what your profession is and what's required. Website's always handy, and then you start trading. But regardless, whatever costs you have incurred as a business owner, as a director, your limited company, all those costs can be included in your accounts because they are business expenses. So always be keeping receipts of all these things that you're spending. Now, question I often get is, what about costs that I have paid for? Me individually, I paid for it. What happens there? And it was for the limited company. Well, the limited company can repay you. So if you as the director have incurred a cost, then keep the receipt, give it to the company, because remember, the company is a separate legal entity, it's not you. You give it to the company, and then the company can reimburse all of those expenses because it was a company expense. You paid for it, but the company can reimburse you. Now, what if there isn't enough money, for example, in the company? Then the business, when it has the cash, can repay you, but for the time being, you just keep the bills, you keep the receipts, whatever it is, and you can put that in what's called the director's loan account. It's like an IOU, and when the business actually has some cash and is actually making some money, it can repay the money that the director has lent to it. So all of that's perfectly fine. Now, the question in terms of what about the money that you may have put in at the start, your startup, the money that you've invested. So the money that you start the business with is called the equity invested, also called the startup capital or just the capital, shareholders, shares, whatever. So that's the money that you may have actually begun the business with, seed investment. It could be capital, it's money that has been put in, invested into the company, or it could be a loan. The director could have loaned the business money to start up. Either way, it's fine. As long as you just keep track of it, this is how much you've put in. And this is why it's so important. Have a bank account, keep the business costs separate, keep all your receipts, so if the business does owe you money, it can reimburse you. You can take out the money that you invested, that you put in. You can get your money back when there's cash there to pay you, and that's fine. That's just you just getting your money back, not a problem. There's no tax on that or anything, because that's just you getting back the money you put in, not a problem. So a lot of people start a business with £1 or £100 or £1,000, whatever it is. If you have a startup capital, an amount that you begin the business with, I would say that the best thing, just place that cash into your bank account, into your business bank account, and then spend from that. It just keeps it clean. Instead of you using your own money continuously, and just take a lump sum, whatever you're going to start your limited company with, put it into the bank account that you've just created, and then start spending from that pot. Just makes your life, believe me, easier. That's the business money, you keep it separate. Now, at what point do I need an accountant? I'm always asked this. So at what point? Very good question. Well, I'd say in the beginning, before you form your limited company, because once again, I ask, why have you formed your limited company? Someone must have told you to do it. So seek advice before you run off and do that, because you may not need to form a limited company. It might be better just stay as a sole trader and just invoice people as a sole trader. Or like, why have you formed a limited company? But at what point do you need your accountant? So have a word with them before you form it. If they advise you that it's a good idea, go ahead and form it. Have a little chat with them as to how you should keep your records. And then usually, if you've got your software sorted, you just pencil in a time, come back to them at the end of year one, and sort of off you go. That's when you need your accountant, at the beginning to set you off on the right track, and then at the end of year one to do your year-end accounts, or that's it. So what is the difference between a bookkeeper and an accountant? Often asked this question. So the difference being, a bookkeeper, I always say it's a bookkeeper and an accountant. It's like a doctor and a nurse. So to me, the bookkeeper is like the nurse, as in they know you a lot better, know you more intimately, and they can do a lot. And it does depend on the seniority. So bookkeepers can be quite basic bookkeepers, almost day-to-day entry, people, or they can be quite senior, just like nurses. You can get your district nurse. A bookkeeper can be quite senior, almost to literally what we call like management accountant level, depends on their experience. But basically a bookkeeper is more of a day-to-day person who is more likely to be on site. This is in terms of how you work with them, more likely to come to you, to your office, roll up their sleeves, as I say, do the donkey work and get involved. They know your business well because they tend to spend more time with you. Whereas your accountant now, on the other hand, I compare them very much like to being a doctor. So it's more about the tax advice and planning. To me, this is where accountants come into their own, because they're the people I believe are the best place for tax advice, for planning, and they can really add value when it comes to things like audit, compliance, if you've got an issue with HMRC, for example, some sort of inspection or something, this is where an accountant can really help you out. They're therefore more expensive because they're more experienced, they're more senior, they took a longer time to get their qualification. Chartered and certified accountants are more senior, and generally you tend to go to them. Very rarely have I ever seen an accountant come out their office to go to the client, but a bookkeeper would generally be much more likely to go on site and come to you. But with an accountant, you tend to go to them, to their office, could be a high street premises, much more fancier than a bookkeeper, therefore more expensive. And generally, it tends to be more of an annual thing that you'd hear from your accountant. So you think about your doctor, you know, it's not all the time you see your doctor, but it's much easier to see your nurse, if you know what I mean. So that's the difference. That's what I say. Now, there is some overlap though with them. So both sets, the accountants and the bookkeepers, are likely to do VAT returns, likely to do your payroll. But in some places, they'll have the bookkeeper do the day-to-day, but the accountant do the monthly payroll. They might have the bookkeeper do the day-to-day, but the accountant do the quarterly VAT return, to in a way to kind of check over the figures that have been put in. So there is some overlap, but at our team, we do it all. Now, some bookkeepers can file simple accounts. Like I say, it's about the level of seniority and experience. And some accountants will do bookkeeping. And then vice versa, there's some bookkeepers who will say, look, I don't do accounts, it's beyond the scope of me. And there's some accountants who will say, don't do bookkeeping, it's too basic, you need a bookkeeper. Just the thing to be aware of is that if accountants do your bookkeeping, they tend to get a junior person to do it, but they'll charge you for the privilege. So just be mindful, don't use your accountant as a bookkeeper, because it's a waste of their skills in a sense, and probably not very good value for money for you. Software is making life a lot easier for everyone. Therefore, a lot of the bookkeeping work is being automated and is being able to be done, and clients are able to do a lot of the bookkeeping themselves now. And it also means it's a lot easier for the accountants to do the bookkeeping now. So they're quite likely to offer that as a service. But this is the thing, your software does need to be set up correctly, because if you follow what the software people say and the way they advertise, you'd think the software could sing, dance, make the tea, file your VAT returns, all whilst, you know, standing on its head kind of thing. So just be mindful that the software is literally only as good as the information put into it. So you do need to use it correctly. So if you have just set up your limited company, or it's been going a little while, just let me recap. These are the steps. Open a bank account, decide on your accounting software, connect your bank to your software, talk to your accountant or bookkeeper. If you don't know where to find one, ask maybe a business person that you know. Who do you use? Can they give you a recommendation? Or by all means, contact us, drop us a line. Our details is at the end of this presentation. Register for HMRC to get a login, and just be aware of your year-end dates and your filing dates. Get out your diary, pencil in those dates. Don't leave it until the last minute. The minute your year-end is up, start looking to prepare your accounts, because even though 9 months sounds like a lot, you'd be surprised at how quickly it spins round, and next thing you know, you've got a month and oh my gosh, you haven't done anything. So don't leave it until the last minute. If you've got any other questions, I will be doing some more videos, just mainly answering the questions that people always ask. So I hope you've enjoyed it, it's been useful, it's been helpful. Please subscribe, like, share. Drop us a line, admin@booglsltd.com, with any questions that you may have. I will do a video to answer it and copy you in. So we're Boogle's bookkeepers. Motto is, you look after the business, we look after the books, and you can find us at booglsltd.com.